All right, gentlemen and gentleladies, start your engines. Coinbase has debuted. It came in at $381. As you can see right now, the shares are soaring, close to $400 a share. Remember, at around $280, this thing gave Coinbase, which is the retail depository for all things, digital currency, a valuation of $100 billion. Now, this is 61% better than that. So I think you can kind of do the math here. This is dwarfing the valuation. That is the Coinbase digital exchange, if you will, the shop through which you buy and sell all of this stuff. A market valuation higher than the NASDAQ and the New York Stock Exchange, the parent of the New York Stock Exchange, the Continental Exchange. So that's just remarkable in and of itself. Now, remember, this is direct listing. So the immediate beneficiaries are original employees, original investors, and unlike an initial public offering, where you're locked into it, and so early players can't sell right away, early investors here can. And then you decide, and the higher this goes, those early investors could say, all right, I could take some money off the table and still make a mint here. Remember, they have to draw to a direct listing. Is you don't need the capital for expansion and other related plans. You're a well-known entity as Coinbase is, much like Slate was a well-known entity. Spotify, or Slack, I should say, was a well-known entity, as was Spotify. So they didn't need that as much as to make a lot of early investors and early employees liquid. They are liquid and then some. They are drowning in liquid, by the way. It's a good position for them to be in. So as the day ensues, the next 2.5 hours, how many start unloading part of their shares, maybe all of their shares, very unlikely all of them, and then who starts buying, and so someone who buys in at $400 versus someone who is convinced that that's way too high. But the past is prologue here. Early investors in Bitcoin were richly rewarded buying originally in those eye-popping levels here. So the fallout with this is Francis Newton Stacy. We've also got Scott Shellady. Francis, your thoughts on this debut pop?
Well, I think what you've mentioned is very important because actually we're not seeing it just yet, but we could see a lot of volatility as people do take profits, and that's going to maybe dissuade some other buyers. And so we'll have to see how that works out. But this is definitely gaining in the mainstream cryptocurrencies, even though Jay Powell just mentioned in an interview that they are not really supposed to be called cryptocurrencies. They're really supposed to be called crypto assets because they're not there to settle payments. And so I thought that interesting distinction was very important, sort of prescient to the regulations that may be coming down the pike.
And Scott Shellady, the fact is people are using them to process payments, and Tesla wants people to use the $1.5 billion worth of Bitcoin it just scooped up a few weeks ago to buy Tesla cars. Having said that, where do you see this going?
Well, I mean, right now it feels like a little irrational exuberance. Yes, there are others out there that are still kind of placating the payment or placating whatever, the cryptocurrency and using it as payment, or at least allowing it as used for payment. You can use a lot of other things for payment too. So that's really not the sale here. I think that Coinbase has done a great job, or at least had great timing going to market with these cryptos trading at their highs. That was fantastic. But we're going to have to wait and see how this shakes out. I mean, these days, no matter what, if it's Coinbase or Slack or whomever, these days are going to be very volatile. And by the way, if you have customers, you still have to be very careful about getting people involved with, the cryptocurrencies anyway, because they can be terribly volatile. And still, we only have like 0.5% of those people out there that are really still involved with it. So the growth potential is huge, but so is the volatility.
Yeah, and I hear you on that. Francis, I look at things as just overall price. Now, I know that so many investment firms and Robinhood and all these other allow you to buy fractional shares, and that is what builds up demand. But if you think about it, if you're looking at a $63,000 Bitcoin for one coin, and now you're looking for a share of Coinbase, the vehicle of which you buy Bitcoin, for $422, it seems like a steal, right? So Some of the other things that are, that are included in the Coinbase market are Ethereum and Litecoin, and so many of these others that are dramatically cheaper than Bitcoin. We could see a shift here, right? But the beneficiary of all of this are these digital currencies themselves, right?
Oh, it's true. I think the risk really now is there's no risk in enthusiasm, even if it is a little bit of irrational exuberance. I think the risk really going forward is the regulatory. Powell was noting settling payments, not just making payments. For instance, gold,
right.
He compared it to gold. But in any case, even Ray Dalio has come out to say that he thinks there's a decent chance that Bitcoin could even be outlawed. So I think the risk exists in regulation. And when you think of other currencies that have gained less prevalence and are less liquid and less traded, then you add that sort of liquidity risk and other risks to those other coins. So I think Bitcoin will remain the leader. And I think some investors, and maybe, I'm at a disadvantage being a money manager who's licensed and thinks about all these things. Maybe I'll miss the boat. But I think there's some regulatory risk potentially. And I know you love it when I super dork out on your shows. But I think the legal precedent, obviously coming off the gold standard, but the Coinage Act of 1873, when we went from gold and silver to just gold, was because the Fed, in order to fulfill its dual mandate, has to have one yardstick to measure the money supply. And so to the extent that these cryptocurrencies start becoming part of the money supply, I think we'll see them get heavily regulated.
You could be right. You don't have to be a dork to point that out. I appreciate that. But, Scott, when we went off the gold standard, there are a lot of people go back to that and say, well, that created these problems, that created these other, hyperkinetic type activities and investment vehicles like gold and made it more of a volatile investment. You could extend that today to Coinbase and Bitcoin. I do wonder, to follow up on Francis's point a little bit, though, Scott, I think if the government at this stage were to outlaw this, it would be maybe prompting a market crash, wouldn't it? I mean, the more and more people get into this, the ETFs that are lining up like planes at LaGuardia right now, waiting for clearance from the Securities and Exchange Commission, the ancillary industries that have been born as a result of this, you stop that or outlaw that, you've got problems far greater than digital assets, don't you?
Yeah, this is going to be a hot potato for a little while, and I could not agree with the sentiments echoed earlier more, because I too have licenses. We have to be very careful and think about all the dangers here. And we talk about anti-money laundering, all the different ways that you can hide capital, and that's something that the government is absolutely against, and so is our industry. So as long as there's opportunity for bad actors, it's going to be heavily regulated. The government's going to want to tax it and get their piece. And so that's always going to be an issue with me. And then at some point in time, maybe not ban them, or maybe they do ban them, but they're definitely going to have, the central banks are going to have their own digital currency. That's what they're kind of all aiming for here. So who's going to then trade Bitcoin versus the Fed's digital currency or whatever? So the question, this is still, for my customer, this is way too pioneering still, right? There's too much danger, too much volatility. Right. Yeah, I mean, we might miss the first move, but I'd rather pay 150 and see it go to 400 than pay 80 and see it go to 20.
That's a very good point. Well, like you guys, I have a license as well. It's a driver's license, so it allows me to just drive really, really fast. And I'm wondering whether early investors in this are seizing on the moment, because maybe this all goes back, guys, to those who missed the Tesla boom, those who missed the Amazon boom, that they want in on this because it seems like easy money. And I'm not faulting them. I mean, obviously, individual participation, the fact that it's getting street cred by street institutions that now have it in their sites to offer exchange-traded funds or outright investments in this technology themselves. I'm wondering if that is spreading fast and justifying all of this. What do you think, Francis?
Yeah, it's true. It's definitely gaining some sort of unexpected momentum. But I just think, listening to Jay Powell's comments from just today, I just think, he said that they're really vehicles for speculation. And so I just think that that's sort of an early warning sign. And I like Scott's point. They are going to come out with their own digital currencies.
Maybe he doesn't understand it. You know what I'm saying? Like, I'm not here to fault him, and I'm not here to be either a cheerleader or a damner for this whole technology, but it does have some apparent traction to it. And I think for someone of Jerome Powell's bent, this is just too weird to grasp and too crazy to sort of appreciate. So he is of the old school opinion here, and they might be perfectly justified. I don't understand what the hell it's about, but I'm afraid that it's going to disrupt things. And the Federal Reserve is not big on disruptors.
Very true.
Really?
I would say,
just made that up.
Neil,
That's
just
so
to,
neat. All right. Go ahead.
Just to jump in, though, Neil, but I think Francis would probably agree. I mean, you just leave the office today and ask people what Bitcoin is. I mean, I don't think they really grasp the whole thing anyway. That's a very difficult. I mean, they need to do a much better sales pitch on what it is. And
right.
So what are you investing in right now? What are you investing in right now? It's FOMO, fear of missing out. I'm just guessing that the guy behind me in line is going to pay more for it than what I did, and that's not really investing. So,
well, what would you tell investors?
That's a great point.
Guys? I wish we had more time. We don't. But what would you tell investors, Francis? There are a lot of people who say, "Well, I'm not banking the college kids' money on it, but I am just I'm willing to risk some money." Is that how you look at it? Because there are people who were, who saw the Amazon juggernauts or the Tesla juggernaut, maybe even Apple. Of course, all those were different because they had a clear, base of support, revenue, eventually earnings that justified at least the kind of enthusiasm that made those stocks go still higher. For those who think that way, Francis, I've got money to burn, maybe not a lot of it, but remember, a lot of these are fractional share buyers. These days, that's quite easy to do. What's the harm in taking maybe a fraction of those fractional shares and trying it? What do you tell people?
Yeah, exactly what you've just said, which is use money that you have to burn, use money that you have to lose. I mean, the challenge with being a money manager is you have to be so forward thinking. I would have put all of my clients, all of their retirement in Tesla last year, and that would have been a total genius. But of course, I'm not going to do that, because that's too much risk to take on. So just if you want to play the crypto game, totally great. Just don't do it with your retirement. Do it with money that you have to lose.
See, I do it with my college age kids. I figure, look, the worst that can happen is you don't go to college. Daddy's rich. So having said that, I'm kidding here because they might be watching. But what do you make of that strategy, Scott? This is a devil-may-care thing, but there's a lot we don't know yet. There are a lot of variables you both astutely pointed out that are out there that make it risky, that make it a little bit like a roller coaster, and that's putting it mildly. What do you tell them, Scott?
I like what Francis said. Look, to your point, Tesla's an electric car company. I understand that. I can invest in that. Amazon used to be a book company. Now it's morphed into something, but I understand what it does, and I feel comfortable investing in that. So those types of things, even Apple or Microsoft, or what the companies are and what they do. They've got, But when you ask the average person, okay, you've invested in Bitcoin, what does it do? They won't be able to tell you. And so they're just going to hope that it's going up in value because it's going up in value. So that's not investing. You know what? I'd rather go to Vegas and put it on red, because that's going to give you a better understanding of what you're doing here, because it is gambling if you don't know what you're putting the money on, right? It's just, you're just hoping that it's going to go up in value because somebody behind you in line is willing to pay more for it than you are. And so, get a grip on what you're investing in. And if you do have that excess capital, I would still argue that's maybe not the right place to put it too. So you might be able to get more bang for your buck elsewhere and actually understand what you're buying.
Yeah, red has odds that you can calculate. At least.
Right, exactly.
I hear
exactly,
you.
Francis.
Neither of you are dorks, by the way. I am a proud dork, so I don't know why you had this discomfort with it, but I want to thank you both. We'll keep an eye on this right now. Coinbase now at just under $400 a share, coming public right out the gate at about $149 less.